Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. What a week it was. So I was sitting at dinner Saturday night when I pulled out my phone to notice that Weekend Wall Street, which is a website that tracks potential moves in the stock market over the weekend when all the markets are closed, was indicating a drop of more than 1% in the broad equity indexes. Now, at first I had no idea why, but upon looking at the news headlines, I saw that the US had bombed Iran's nuclear facilities and talk of the potential for Iranian retaliation was rampant. So when oil futures opened Sunday night, they were up about 4% and the S&P was down around 0.5%. However, by the end of trading on Monday, everything had turned around. The S&P was up 1% for the day, and the price of oil actually finished down nearly 10% from Friday's market close. Now, this was obviously due to discussions around a ceasefire and an agreement between Israel and Iran. Now that stocks are pushing to new all-time highs, as more good news keeps rolling in, we'll have to see if the good times can continue. But for those of you playing at home, this is a good lesson in why trading headlines can be a recipe for disaster. You never know what the next headline will be and just how quickly markets will shift. For this week's featured insight, understanding risk reward. Taking more risk doesn't necessarily lead to more reward. For one, there are reckless risks that are likely to lead to a lot of pain, or even worse. And even reasonable risks are still in fact called risks for a reason. They don't always pan out the way you hope. Now, investing is about finding opportunities where the perceived risk is great, but the actual risk is somewhat lower. In other words, you want to buy low expectations, because low expectations mean you're getting a good deal for whatever you're buying, and the bar isn't very high to outperform those expectations. It probably goes without saying that the reverse of this is also true. Looking ahead, turbulent first half comes to a close. Well, depending on when you're watching this, the first half of 2025 is either very close to being history, or it already is. It went pretty fast if you ask me, but it was certainly anything but dull. We had an S&P 500 that was down close to 20% in early April, but finished the first half of the year up nearly 5%. And despite all that equity market volatility, interest rates, and therefore bonds, barely budged, and they've actually been trading in a tight range for most of the past several months. So what will the story be for the second half? Well, making predictions is always difficult, especially when it's about the future. But if the first half is any indication, there are likely to be plenty of surprises ahead. On the bright side, there does still seem to be a lot of pessimism out there, and institutional investors are still positioned rather defensively. So this creates the potential for more upside in the stock market as many start to have to play catch up given the improving outlook going forward. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.